from storyflo. This is your daily audio brief for June 17th. It's Mason, June 17th. Here's what I'd flag before the open. Let's get into it. First, from capital flows. The Warsh regime change and the credit cycle. Capital Flows has a new daily structure where I will do a stream every market session, breaking down the macro regime so that you have clarity on where we are and conviction on what to do. You can find the recording of the free section explaining the macro mechanics and drivers of interest rates here. The macro charts and decks from today are here. How to position into events by Jaymes. Link macro deck. In tomorrow's live stream, we will watch the first press conference with Warsh and break it down in real time. The first section of today's stream covered how to understand interest and why they matter for the credit cycle melt-up that we are in. If you are trying to understand how much risk there is for equities and interest rate volatility for your portfolio, today's stream will give you clarity. We will then go over the new framework that Warsh lays out for the monetary regime. Here is the YouTube link for tomorrow's live stream. The private members link for the second half of the stream covering the proprietary research will be right below it. Here is the proprietary report explaining how to understand interest rate risk, inflation risk, and its impact on equities. Next, second, from Startup Deal Desk, SpaceX at $2 T plus, Fed signals shift, and the hunt for uncorrelated alpha. This week feels less like a market update and more like repricing what risk and return actually mean. SpaceX continues to move through valuation and index flow gravity. The Fed signals stability rather than surprise. Geopolitics briefly softens risk sentiment, and beneath it all, capital keeps migrating towards structures that don't depend on direction, only execution. The common thread: investors are no longer just choosing assets. Powered by Thinkfish, Warsh's first Fed meeting sets a rate hold baseline for a potential new policy era. Markets react to geopolitical easing signals as oil falls 3% plus amid shifting Iran conflict narrative. SpaceX IPO chatter plus 19% to $2.1 trillion plus 80%. Tesla merger odds. SpaceX enters Nasdaq 100 inclusion pipeline, fueling index flow-driven demand expectations. Satispay raises €120 million to expand into stock/ETF trading and pensions, scaling 6.5 million users and €116 million ARR. Regulated online gambling continues to grow globally, yet many traditional investors avoid the sector due to licensing requirements and regulatory complexity. They're choosing systems of return. Welcome back to Startup Deal Desk. Discerning Capital was built to fill that gap, providing specialized equity and credit solutions to operators across the ecosystem. Only dedicated growth capital provider focused on regulated online gambling operates in a market generating $3 B plus in annual and activity. Concentrated specialist strategy focused on catalyst-driven opportunities. Prior investment experience includes a 15x return on a Las Vegas Sands investment schedule. Intro call company LinkedIn. Meet Davis Catlin. LinkedIn traditional portfolios often struggle when markets become volatile, leaving investors searching for alternative sources of return. The fund combines quantitative modeling, AI-driven analysis, and institutional risk management to create a liquid alternative for investors seeking uncorrelated performance. $50 million fund targeting 30% plus net annual returns after fees. Positive audited returns every year since inception. Monthly liquidity with no investor lockup period. Founder has 100% of his liquid net worth invested alongside LPS investor and advisor network includes leaders from Citadel, Nasdaq, Morgan Stanley, Google, Meta, and Tesla. Schedule intro call company LinkedIn. Meet Stephen Wu. LinkedIn. Many investors hold substantial cash reserves to preserve capital, but inflation can quietly erode purchasing power over time. By combining deep industry expertise with flexible capital, the firm aims to become the leading growth capital provider in a market underserved by traditional venture and private equity. Carthage Capital operates an options income strategy designed to generate consistent returns across markets. By combining systematic options trading with strict risk controls, the fund aims to deliver attractive risk-adjusted returns without relying on long-term market appreciation. 95% win rate and 10.6 sharp Stop ratio trades 0 DTD SPDEX options with approximately 90% plus probability of profit at entry, automated futures hedge, and 0 overnight market exposure, approximately 0.12 correlation to the S&P 500 schedule. Intro call company LinkedIn. Meet Griffin. LinkedIn. The pattern is becoming harder to ignore. Flex Income Fund was designed to provide a different option, a probability-driven trading strategy that seeks consistent income while remaining largely indifferent to market direction.